Welcome back. Joining us with a closer look on what's playing itself out on that market scene at midday is David Shapiro from Sasfin Securities. David, a pleasure. Good afternoon to you.
Yeah, I'm sorry that I'm on my cell phone. All my electricity blew just as I was coming on. So this is the emergency. Apologies.
Well, all good, David. We're glad
I shake, it's because I'm holding my phone.
Well, I'm glad we can talk to you. I think we're very keen to have a chat with you today because there's so much happening. I think maybe we can start off in the U.S. Fed minutes. Keen to get your thoughts on that and what to make of it. In my mind, the Fed is still coming across as hawkish and very cautious.
That's not unexpected. They're going to continue that line until they pivot. Remember Jay Powell in December, everybody was believing that he was going to keep interest rates high. All of a sudden, he blinked and markets took off. He's backtracked now. I think he was a bit concerned by the speed at which the treasuries adjusted and rates started to come down. So he remains a bit negative. And most commentators are, but I honestly think one shouldn't consider that. And I think that just wait, the time will come where rates, do start to fall. And when that falls, I think it's going to be as severe in a positive way, for markets. So it will happen. But I think you've got to look at what happened in NVIDIA. I know that Wayne and I were talking last night. We were nervous. There was so much hype around it. We were dead scared that NVIDIA was going to disappoint. And instead, they came through with flying colors. So we're back on track, and a lot's, it's going to be, it's going to lift U.S. markets by big numbers today. So looking forward to that, but still a bit cautious. Still saying, okay, what's going to happen next year and the year thereafter? Can they sustain it? So I think that's going to be the big question. But in the meantime, we can still rock and roll on NVIDIA.
Absolutely, and I think it's encouraging. It's not only the semiconductors, David, but it's also the data centers. So every part of the business really just at the right place, at the right time, and with a strong client base.
I think we underestimate. We underestimate the amount of money that's going on. When you look at NVIDIA's numbers, I mean, these are astronomical, and the cost of actually transforming your data centers. And I think this is where the gains are going to come. And also, I don't know what it is, revitalizing them, by changing the semiconductors in them. I'm an accountant. I know absolutely nothing about them. I couldn't tell a phone chip from a data center chip, but I think when you, and a lot of the commentary is beyond my comprehension, but I do understand the numbers, and I think that's the big driver at the moment, and it's exceeded our expectations. We've seen it in ARM, we saw it in Palantir, we've seen it in most of the big tech companies, the amounts that they're spending. So I think for the meantime, you can still go with that theme. I think there's still a good year or two of this kind of growth built in. It's from then on that we have to start, re-looking at it.
Well, it looks like there's still some time for money to be made, David, the way that I see it there, where NVIDIA and the likes are concerned.
Oh yeah, and I still think they'll be bid up. The difficulty is what you do with newcomers. When you get fresh money, that's the hard thing. With people who've had NVIDIA, that's easy. You've got margin to play with, even in the tech companies. But what we are finding now is with the poor performance of the JSE over the last couple of years, suddenly investors are looking and saying, hold on, I want to have some of that. And now we're finding a lot of people want to go offshore at a time where, hold on, where it's difficult. You're not going to get the same kind of returns. You'll get good returns, but it's very difficult to put them in at these kind of levels.
I'm glad you mentioned
promise the same returns, yeah.
I'm glad you mentioned the JSE because there's lots coming out of the JSE today as well, mainly with mining. We have Harmony that's done super well, Goldfields that hasn't. It is quite a mixed bag there. In my mind, though, gold miners faring better than the other metals there because gold is just that safe haven asset that has held up over this very difficult time.
Exactly right. They have the gold price is held up, the rand has come under pressure, and the miners have positioned themselves well. They haven't felt the same strain as the iron ore producers. They haven't got the issues that the platinum producers have had. They haven't got the issues, certainly the iron ore producers have had, or coal producers, of having to get their coal to harbour and put them on, big ships and ship them off. Gold is much easier. You just put it in your pocket and you get on a plane. Or you put it in the hold of an airplane, a couple of gold bars. So it's not that they're not finding the same kind of difficulties. Of course, local miners have issues here with costs and with inflation and with load shedding and so on. But they have fared a lot better. And remember, gold fields and most of the operations are not really exposed heavily to South Africa.
With that said, Anglo-American writing down De Beers, David. Keen to get your thoughts on that. I think it's a 30% write down. It's quite a number. What could be happening there? Is it the synthetic diamond story that's really giving a De Beers a run for its money?
Well, something is, and yet they've spoken so highly of De Beers. There's jewelry demand remains very buoyant. If you look at the luxury goods, it's remained exceptionally strong. So it's a bit surprising, but you have to look. We've been seeing quite a few write-downs, and I think what miners do and what businesses do, they write it down to what I don't know what the correct expression. I call it economic value. They write it down to a value where the returns are acceptable, where they can justify. It's all bookkeeping. It's putting through journal entries. At the end of the day, the money is lost. The money is gone. But I think it does show you how difficult it is, and maybe how high, what high prices they paid for these assets. But it's good accounting to bring it down, and but it does highlight kind of wasted capital or capital that you're not going to recover.
Well, David,
you never write up once,
Well, David, last night you chose L'Oreal as your stock pick. Before we get into your insights and whether you're sticking with it, let's check what else found a favor with your industry peers.
L'Oreal. Just think excellent run company, and I think it was taken down by worries of China, but I think that's going to be history. And if you want to play China and you want to play also a world economy turning, I think it's a company I've always liked, and I like that consumer side. Staying away from AI and all of that tonight, so just going for consumer stuff.
SA government bonds, 10% yield, inflation, even though it went up, it was still more or less in line, in fact, slightly lower than what the predictions were. I mean, this is at 5.4. You're getting a proper real yield on this thing. I know you pay tax, I got you, I understand all of that, but that's not a bad, relatively safe investment for your non-equity portfolio.
It's the Satrix China ETF. It's a little bit boring to pick in an exchange-traded fund, but I'm tired of picking Naspers or Prosus whenever we call China cheap. And Tencent isn't as cheap as the broader Chinese exchange. And I know South African managers get a lot of their Chinese exposure via those two big stocks, but ultimately we also have the possibility of using a passive to get exposure to the broader exchange. It's recovered a little bit in rand terms, at least from its bottom around a week ago. I believe the 14th of Feb really bottomed out, but it's still incredibly cheap. And if we see continued conviction, and of course the sort of global outlook is that Chinese, this Chinese slowdown is bottoming out in 2024. Given that these Chinese equities are so cheap at the moment, it looks like a good opportunity to add that to your portfolio and participate in that upside as they are expected to recover over the following 12 months.
All right, David, we have your L'Oreal. I'm wondering if you're sticking with that one today, but also that Satrix MSCI China Feeder ETF. That's that whole China story that's been a mixed bag.
No, I worry about China. You know, there's too much interference. In fact, I think even on last night's show, we were discussing if you're going to play China, that's why I chose L'Oreal, because it's a Western company selling into China. LVMH, Ferrari, all the other brands, even Starbucks and so on. But there's so much interference in the Chinese market at the moment. There's so much authoritarian control that it scares me a bit, you know, and I know it's cheap, and it's probably could remain cheap for a long time, but I'm very cautious of how the government are trying to control that stock market. Yes, you know, they've now told foreigners you can't, or foreign investment companies, you can't buy at the opening, or you can't sell at the opening, and you can't sell at the close, you know, all kinds of rules. And when you start doing that, it's time to worry. So yeah, it's cheap, but there is a reason why it's cheap. So, you know, just be cautious of China.
With that said,
don't be cautious of the Chinese consumer. You know, Chinese consumer got lots of money spending, traveling, but Chinese authorities, that's a different story.
Definitely an important distinction to be made there, David. I'm wondering if you're sticking with L'Oreal today, or if there's another counter you're loving.
I've always liked L'Oreal. Just, it's one of these brilliant companies that have managed to adapt to circumstances. They understand their customers. Very high tech. We don't understand how high tech they are and how they use technology in deciding what to sell in various markets, and that they came under a bit of pressure because of things, you know, went the wrong way in China, and it hurt them on that area. But they're recovering from it, and I would imagine as the Chinese start to spend again, they're going to continue. Look, and I'm a tech freak, you know, and I was a bit nervous last night, so I thought, okay, I'll just change tech for a bit. But I do like L'Oreal.
Me too, David. Me too. Thank you so much for your time today. It's been a pleasure. It's been a pleasure chatting to you. That was your midday markets update with David Shapiro from Sasfin Securities.